Hey folks, CA Rachana Ranade here. If you have subscribed to my channel and hit the bell icon, then you are already aware that I'm doing some interesting videos as well. Something like what is Gift Nifty? We did a video on a very basic explainer 101 on what is Gift Nifty. After that, looking at the comments, I decided to do one more follow-up video on how can a person invest in US stocks via Gift City. In that video I got a lot of comments, so today I thought of doing a third video in the same series wherein I thought of specifically focusing on parameters which one should check while they are studying US stocks. So there are going to be some common parameters whether it's a US stock or whether it's an Indian stocks, these will remain same. But if you are wanting to invest in US stocks, especially I study 2 3 extra points, and all these points I'm going to cover in today's video. Interesting video, so keep on watching the video till the end. So now we are going to try and understand top 4 or 5 points that I do check without fail whether I'm studying an Indian company or whether I'm studying a US company. Okay, very important. Do I check only these 4 or 5 points? No, I'm just giving you 4 or 5 top points that I do check without fail, right? So let's start with the very first one. It's a business overview. We must try and see whether the company has any specific moat or not, whether they have any USP or not, right? For that, what all points do I check? First things first, I check what does the company do. To understand the moat, I need to understand what does the company do. It's extremely important for me to understand what products do they sell, what services do they sell. Unless and until I don't understand their product, it makes no sense in investing such companies. Okay, so first things first, I try and understand what is their product, and once I understand the product, I try to see whether there is any switching cost involved in their product or not. For example, if I'm studying a stock named as Apple, everyone knows this stock, right? Let's talk about a customer. A customer has iPad, the customer has MacBook, the customer has iPhone, the customer has AirPods, and assume that after 5 6 years after buying the MacBook, the person feels that let me now switch to another laptop. Do you think there are chances that a person will go ahead with some different company's laptop? Very rare chances. Why? Because that person has an ecosystem with himself or herself. So the switching cost in such a case is going to be pretty on a higher side. Okay, so in such cases I do try and understand two things: what does the company do, the basic understanding of product services, and what could be the switching cost. Okay, company's product is good, but very important, do the products have any future or not? So, for example, if I'm talking about a company which was manufacturing normal cameras, digital camera, the roll camera, sorry. Once digital cameras came into place, the roll cameras almost saw a crazy downfall, and they're all, I mean, it's a dead product, right? So, extremely important is to see that whatever products company is making, do they have any future or not? So, again, if I'm talking about Apple products, we do understand what is their current range of products. What I should also check, are they innovating or not? What different R&D they are doing, so that they ensure that they are well within the game, right? Very important. Number 3, I check what is the geographical presence for that company. Do they sell their products only in a specific country, or do they have a global presence? Higher the presence, wider the presence, I can say that the geographical risk goes on a lower side. Okay, and very important, whom do they sell to? Do they have a very concentrated clientele, or the clientele is again having, I mean, is there a very wide base for their clientele? I'll give you a simple example. There was a company whose revenue, whose total revenues 80% was coming from a single customer, and what happened was that that customer went bankrupt. So I mean, the original company was not at fault. Just because their customer went bankrupt, their business actually saw a big downfall, and that is the reason why you should check whether they have a concentration risk at a customer level as well. Okay, now that you have understood, so right now I told you 3 4 points, but all belong to one point only, which was business overview. Second point that I check now is company's stock price graph. See, any stock chart like this where it's a continuous downfall, stock has fallen 80% 90% from its highs, I generally don't go ahead with such stocks unless and until there is a big reversal, there is a big change in the story. If nothing of that sort happens, I'm going to totally avoid. What sort of graphs I would like to see? I can see that there's a nice growth, there's a breakout, again some consolidation, breakout. If a stock goes into that pattern, I surely go and check such stocks as well. Moving on to number 3, which is financials. Extremely important. Do I check revenue CAGR? Yes. Do I compare the revenue growth with industry growth? Obviously, yes. If the company's revenue growth is higher than industry growth, why not? Correct. Then do I check EBITDA? EBITDA growth or EBITDA CAGR? Absolutely yes. Now, one more important point is that if EBITDA CAGR is higher than revenue CAGR, I'm happier because it means that there is a chance that their margins are also improving. And ultimately, what I check the PBT ka CAGR. Okay, why? Because if profit PBT CAGR is higher than EBITDA CAGR, and that is ultimately higher than the revenue CAGR, it's like gold. It means that the company is not only growing its revenue, they're also managing their expenses well, and their ultimate earnings growth is very good, right? So all these things is what I check. Even at pat level, I do check whether their profits are higher than their industry peers or not. So this is about some basics of profitability state P&L statement that I would check. At balance sheet level, of course, I'll check something like how much is the debt, how much is the equity. So basically I can just check debt to equity ratio and finish it, right? uh, Talking about the fourth point, sometimes, not every single time, I'll be honest, but sometimes I do check for Indian companies analyst reports. But if it is about US companies, because I feel that my understanding, if I were to compare Indian stocks versus US stocks, I will give a shade higher rating for myself for my understanding of Indian stocks as compared to US stocks. But when I'm talking about US stocks, I would want to know what are US analysts talking about US stocks. So I do check that. I do check sentiments. I do check targets for these companies. How to check that and all, we'll understand in the next section of the video. But I do check analyst reports as well. Moving on to the last point, which is valuation. Of course, any company can be a bad company if I'm buying it at an extremely high price, right? So, which all points can I check? I can definitely check PE. For PE, I'll compare it with its own historic PE. I can compare PE with its competitors. Apart from that, I can check PEG as well, which is price earnings to growth, because PE could be on a higher side, but if PEG is say 1, 1.5, extremely higher side, somewhere around 2, I may say, okay, okay. So that would be about valuation, right? So I hope you have understood all these 5 points, which I do check for Indian stocks as well as US stocks. Now I'm going to take an example of a US stock, but in that example, I'm going to tell you 3 important points which I check only and only for US stocks. Now, let me give you the example of how I would have studied Apple stock. Of course, we know what does the company do, but just in case if I was not aware about exactly what does the company do, there are 2 3 basic pointers. I would have gone through the annual report, then maybe gone through their investor presentation, their con call transcripts. But then you might be like, Rachana, please tell us some shortcut to understand what does the company do. And I must tell you, I came across a very interesting feature in the IND Money app. So I'm just going to quickly show you how it works. I'm here on the app. I'm just going to click US stocks and then I'll say search. Okay. In search, I'm going to say search for, let's say, Apple. Okay. Then I'll just go into this. I'm just going to scroll down and here you will see analyze with Mind AI. This is a very interesting AI tool that I found on this app. So let me just directly say, which products do they sell? Tell me the geographical and product wise revenue split and who are their major clients. The same points that we discussed right now. I'm just going to say, okay. It's just taking a moment and then it's saying they are just fetching the latest fundamental snapshots for this company. And yes, this is what we get in a second. This is Mindstake. And what does it say? It tells us about the business overview. You can very clearly see here. You can also get the revenue breakup product wise and geography wise. You can see the major client where it says that it's a broad customer base. Agreed. Oh, I had not asked for 1 point, but it has already given me what is the financial highlight and also a basic takeaway. Well, now that we saw the business overview from their app, let's check the basic additional points about how to analyze companies, not from their app now, but from their website. So, if you remember, I told you about the chart. So, should you go ahead with something like 1 month chart, 3 month chart, 6 months chart? No, ideally, try and zoom out as much as possible, and you will see that this is the chart of Apple for the last 5 years. Overall, in an upward trend. Yes, that's a basic thumbs up from my side. Okay. Now, if you remember, next point I had told you that I would check that how are the fundamentals, and for that, what would I check? I would check the revenue growth, I would check the EBITDA growth, I would check the PBT growth, and if you remember, very important, I told you I would also check whether their PBT growth is higher than their EBITDA growth, which if higher than revenue growth, it's amazing, right? So for that, you can see our quarterly P&L. The latest quarter data that we can see here is December 25 quarter. Of course, we'll compare a YOY. So we'll check that with December 2024. All the numbers are in $1 million terms. So if you see, I'm just going to round it off, right? There are Top line grew from 1,24,000 to 1,43,000. If you check EBITDA has gone up from almost 46,000 to 54,000. Again, I'm repeating all numbers in million dollars. Okay. And if you see the income before tax, which we refer to as PBT, profit before tax, that has gone up from 42,000 to 51,000. Okay. So are the numbers increasing? Yes. And if you check the growth as well, this number, this one is also ticked off because the PBT growth is higher than the EBITDA growth is higher than the revenue growth. Okay. Now if I understand all these basic points, I would also want to check about what are certain basic valuation parameters. So for that, if you see here on their website only, you can see stock fundamentals key indicators, and here I would check the PE ratio. What is the PE ratio? It is 33. But then if you remember, I told you that I will not check this as a standalone number. I would want to compare it with its own historic data also. And a very nice presentation that you can see in the overview tab, that what was their lowest PE ratio. You can see here as at 31st December 2022, it was 24.26. If you see, highest is at 37.41, and today's PE ratio, February 19th, it's at 33.44. And if I were to compare it with industry average, it is 32.28, so shade higher than the industry average. But I mean, it's just a one single view, and I see what is the lowest PE, highest PE, and current PE compared with industry PE. Very nice way, presented in a very nice way, right? Then if I were to check the trends, overall historic trends also I can see for PE, but not only PE. If you remember, I've told this many times, do check the PEG as well. PEG ideally 1.5 to my, I start getting more and more uncomfortable, and here PG is slightly on the discomfort side, which is at 2.3. Okay. Can you check other ratios as well? Yes, something like ROE, all higher the better. More and more you check, better it is, right? One thing I definitely check when I study US stocks is the analyst recommendation. Reason is very simple. I believe that, see, if I were to rate myself, how good I am at analyzing Indian stocks versus US stocks, I believe I'll give a higher rating for myself for Indian stocks. Simple reason, I have been investing in Indian stocks since 2006. Okay. For, of course, I have not been investing in US stocks since that time. I don't think any tools were, or any, there was any way through which it was easily possible to invest in US stocks back then. So what I do is that I also check what other analysts have as their opinion on specific stocks. So here you can see analyst recommendation on Apple based on 48 analysts. You can see how many percentage analysts are saying buy, how much percentage analysts are saying hold, how many of them are saying sell. Okay, so you can see a very nice analyst recommendation here. One more very interesting point that I saw here was about stock investor sentiment and interest. This sentimental analysis and interest analysis. So what does this say? How many people have searched for this stock, and this stock search has increased by 48% in the last 30 days. So something again very interesting, right? And even if you check what, if you were to check the investor sentiment, you can see here investment in Apple Inc shares on IND Money app has grown by 16.7% over the past 30 days. Now one more very interesting feature I'll just show you. This is about the returns calculator that I found. Okay, you might be like, oh, returns calculator is normal, 1 year return, 3 year return, 5 year return, whatever. But what was the interesting part that I found here is it just does not mention how much returns did an investor get in the last 1 year if that person would have invested. They also give a split. How much is the actual return on the stock, and also how much are the dollar returns? Because everyone who studies basic economics, they know that rupee has depreciated over the last so many years, and a rupee depreciation is going to be obviously beneficial for an Indian investor who is going to invest abroad. That's going to be like an additional return for such a person, right? So you can see here in the last 1 year, though the returns were 12.24% for Apple, actual returns were only 7.9%. Additional returns of 4.33% were because of the dollar returns. Okay, because of the rupee depreciation. Same thing, you can see how much it happened for the last 3 years, 5 years, 7 years. So 7 years, or even if you say 10 years, 32% returns only and only because of the rupee depreciation, right? There are so many more points. The more the merrier. I just told you these are not the only points I check, but definitely I will check all these points before I finally take a decision on whether to invest or not. All right, now at least analysis part has been sorted. But then question is, if I were to buy any US stock, example, this is not a recommendation, example, if it was Apple stock, one stock is at $264. Is it even pocket friendly? Answer is no. But then what could be a solution? Solution is simple. fractional investing is allowed in US stocks. So basically, I need not buy even one share. I can buy 0.0 or whatever, 0.01, 0. Whatever. I can buy for any US stock. But how can that be done? Now, for that, you can just open IND Money app, just hit buy, or you can also do an SIP in this stock. Okay. So now analysis part is clear. Execution part is clear. Question is, what about taxation? If you are wanting to know more on taxation, what are the basic pointers regarding US withholding tax, if you want to know about that, what about the capital gain tax, if you want to know more about this in detail, please let me know in the comment section. I'll be more than happy to do a follow-up video. But all in all, I hope you have understood one positive point about IND Money is that a lot of research things are available on their app, and it's not only research and investing both can be done through the same platform. So basically, user need not switch for researching on one app and then executing on the other app, right? So entire journey happens at one place. Experience becomes smoother and more convenient, right? I hope you enjoyed today's video, and if you did, please don't forget to smash the like button. Please don't forget to share this video with your friends. I'll see you in the next one. Till then, take care. Jai Hind and bye bye. You might have come across such advertisements on various social media platforms. Please note, all of these are fraudsters promising unbelievable returns through stock tips. I don't provide any calls or advisory services. I provide only educational content through my social media handles and through my website rachanaranade.com and rachanaranade.in.